My friends, it's wonderful to be with you all today. I'm so glad you've taken the time to be here and learn about how to invest smartly. This is a topic that's near and dear to my heart because I truly believe that smart investing is one of the keys to achieving financial freedom and living the life you desire. Now, I know that the world of investing can seem complex and intimidating, especially if you're just starting out. But I'm here to tell you that it doesn't have to be that way. With the right mindset and a little bit of knowledge, anyone can become a successful investor. So let's dive in, shall we? First and foremost, we need to address the elephant in the room, fear. How many of you here today are hesitant to invest because you're afraid of losing your hard-earned money? I understand that feeling, believe me. Investing can be risky, and the thought of putting your money on the line can be downright terrifying. But here's the fear holds you back. You're missing out on one of the most powerful tools for building wealth and securing your financial future. Successful investing isn't about eliminating risk. It's about managing it. And the truth is, the biggest risk you face is not investing at all. Think about it this way. You keep your money stuffed under your mattress or sitting in a low-interest savings account, you're actually losing money over time due to inflation. By not investing, you're essentially guaranteeing that your purchasing power will decrease year after year. And that's not a risk I'm willing to take. So how do we overcome this fear and start investing with confidence? It all comes down to education and planning. The first step is to understand the different types of investments out there and how they work. Stocks, bonds, real estate, mutual funds, ETFs. The list goes on and on. Each of these investment vehicles has its own unique characteristics, risks, and potential rewards. Now, I'm not going to sit here and tell you that you need to become a financial expert overnight. That's simply not realistic. But what I will say is that you need to take the time to educate yourself and develop a basic understanding of the investment landscape. Start by reading books, listening to podcasts, and watching online tutorials. There's a wealth of information out there, and the more you learn, the more confident you'll feel when it comes to making investment decisions. And don't be afraid to ask questions. Reach out to financial advisors, investment managers, or even friends and family who have experience with investing. They can provide valuable insights and guidance as you navigate this new territory. Another key step in overcoming your investment fears is to develop a well-thought-out, diversified investment plan. This means spreading your money across a variety of different asset classes so that you're not overly exposed to any one type of risk. For example, you might have a portion of your portfolio invested in stocks, another portion in bonds, and maybe even some real estate or alternative investments like cryptocurrency or precious metals. This diversification helps to minimize your overall risk and provides a more stable, reliable path to long-term growth. Of course, the specific allocations in your investment plan will depend on your individual goals, risk tolerance, and time horizon. But the general principle is the same. Don't put all your eggs in one basket. Diversify. You need to have a clear understanding of what you're trying to achieve with your investments. Are you saving for retirement, buying a house, funding your child's education? Whatever your long-term objectives may be, it's crucial that you have a roadmap to guide your investment decisions. And that this way, if you don't know where you're going, how will you know when you've arrived? By setting specific, measurable, and time-bound financial goals, you can create an investment strategy that's tailored to your unique needs and circumstances. And let me tell you, there's nothing quite as satisfying as watching your investments grow and knowing that you're on track to achieve your goals. It's a feeling of empowerment and control that simply can't be matched. Of course, setting goals is only one piece of the puzzle. The real key to smart investing is staying disciplined and consistent over the long haul. That means resisting the urge to make impulsive, emotion-driven decisions and sticking to your investment plan, even when the markets are volatile or the news is gloomy. I know it's not always easy. Believe me, I've been there. When the stock market is plunging and the headlines are full of doom and gloom, it can be tempting to panic and sell everything. But that's exactly the wrong thing to do. The truth is, successful investing is all about patience and perspective. It's about having the courage to stay the course and trust in the long-term trends and fundamentals that drive markets higher over time. Think about it this way. If you had invested in the CP 500 index back in 1990 and held on to those investments through all the ups and downs, you would have seen an average annual return of around 10. That's the power of long-term, disciplined investing. But it's not just about riding out the market's ups and downs. It's also about being proactive and making strategic adjustments to your investment plan as your needs and circumstances change. Maybe you're getting closer to retirement and need to shift your portfolio towards more conservative, income-generating assets. Or maybe you've come into a lump sum of money and need to figure out the best way to invest it. The point is, investing is not a set it and forget it kind of thing. It requires ongoing attention, analysis, and refinement. And that's where a good financial advisor can be an invaluable resource. Now, I know what you're thinking, but Jim, isn't hiring a financial advisor expensive? And don't they just try to sell me products that make them more money? Well, let me address those concerns head on. Yes, working with a financial advisor does come with a cost, but the value they can provide in terms of personalized guidance, tax planning, risk management, and strategic investment advice often far outweighs the fees. And as for the concern about conflicts of interest, that's a valid one. There are certainly some financial advisors out there who are more interested in lining their own pockets than helping their clients achieve their goals. But that's why it's so important to do your due diligence and work with a reputable fiduciary advisor, someone who is legally and ethically bound to act in your best interests. First and foremost, the importance of overcoming your fear of investing cannot be overstated. Fear is the single biggest obstacle that holds so many people back from achieving their financial goals. But as I emphasized, the real risk lies in not investing at all. When you keep your money sitting in a low-yield savings account or stuffed under your mattress, you're essentially guaranteeing that your purchasing power will erode over time due to inflation. On the other hand, by investing smartly, you have the potential to grow your wealth and outpace the rate of inflation. I know that the idea of investing can be daunting, especially for those who are new to it. That's why I encourage you to take the time to educate yourself and develop a basic understanding of the different investment vehicles and how they work. Start by reading books, listening to podcasts, and seeking out resources from reputable financial experts. Learn about the pros and cons of stocks, bonds, real estate, mutual funds, ETFs, and other investment options. The more you know, the more confident you'll feel when it comes time to make investment decisions. And don't be afraid to reach out to financial advisors or experienced investors for guidance. These individuals can provide invaluable insights and help you navigate the complexities of the investment world. But education is just one piece of the puzzle. The other critical component is developing a well-diversified investment plan that aligns with your specific financial goals and risk tolerance. As I mentioned earlier, diversification is key to minimizing your overall investment risk. By spreading your money across a variety of asset classes, you can create a more stable and reliable path to long-term growth. For example, you might have a portion of your portfolio vested in stocks, which offer the potential for higher returns, but also come with greater volatility. Another portion could be in bonds, which tend to be more stable but with lower returns. And you might also consider alternative investments like real estate or precious metals to further diversify your holdings. The exact allocation will depend on your individual circumstances, but the general principle is the same. Don't put all your eggs in one basket. Diversify, diversify, diversify. And speaking of goals, that brings me to another crucial aspect of smart investing: having a clear understanding of what you're trying to achieve. Whether it's saving for retirement, buying a house, funding your child's education, or something else entirely, you need to set specific, measurable financial goals that will guide your investment strategy. By knowing exactly what you're working towards, you can create a roadmap that will help you stay focused and on track, even when the markets get turbulent. And that leads me to the next key principle: discipline and consistency. Successful investing is not about making a quick buck or chasing the latest hot investment trend. It's about having the patience and fortitude to stay the course, even when the markets are volatile or the news is gloomy. Too often, I see people make the mistake of panicking and selling their investments at the first sign of trouble. But that's exactly the wrong thing to do. The truth is, the most successful investors are the ones who have the courage to stay the course and trust in the long-term trends and fundamentals that drive markets higher over time. Think about it this way. If you had invested in the S&P 500 index back in 1990 and held on to those investments through all the ups and downs, you would have seen an average annual return of around 10. That's the power of long-term, disciplined investing. Of course, staying disciplined doesn't mean that you should never adjust your investment plan. In fact, one of the hallmarks of smart investing is being proactive and making strategic adjustments as your needs and circumstances change. Maybe you're getting closer to retirement and need to shift your portfolio towards more conservative, income-generating assets. Or maybe you've come into a lump sum of money and need to figure out the best way to invest it. That's where a good financial advisor can be an invaluable resource. These professionals can provide personalized guidance, tax planning, risk management, and strategic investment advice to help you navigate the complexities of the financial landscape. But Jim, isn't hiring a financial advisor expensive? And don't they just try to sell me products that make them more money? Those are valid concerns, to be sure. But the truth is, the value that a reputable fiduciary financial advisor can provide often far outweighs the cost. And when it comes to potential conflicts of interest, that's why it's so important to do your due diligence and work with someone who is legally and ethically bound to act in your best interest. Look, I know that investing can be complex and intimidating, but I truly believe that it's one of the most powerful tools we have for building wealth and securing our financial futures. And the good news is, with the right mindset, knowledge, and plan, anyone can become a successful investor. Look, I get it. Investing can be complicated and intimidating, but I truly believe that it's one of the most powerful tools we have for building wealth and securing our financial futures. And the good news is, with the right mindset, knowledge, and plan, anyone can become a successful investor. Remember, the journey to financial freedom is not a sprint. It's a marathon. It takes time, effort, and a steady long-term mindset. But if you stay the course and remain committed to smart investing, I have no doubt that you'll get to where you want to be. So what are you waiting for? Let's get started. I'm here to support you every step of the way. Thank you all for being here today. I'm truly honored to share this journey with you.